Welcome to the Strategy Investment Podcast with Brett Warner. Brett is a successful entrepreneur. He is an investor, and he and his team have sold over $1 billion in real estate. That's exactly what the show is about. Real estate, investing, and family finance. Hey, my name is Jason. I'm your co-host here asking your questions and learning along with you. And whether you're listening on the podcast or watching on YouTube, we're glad that you're here. And here today is actually Strategy Real Estate offices. The building and business that Brett actually built from the ground up here in Silverdale, Washington. And today, Brett, we are talking about exit strategy. And we're going to talk both about real estate from an exit strategy standpoint and also investing, like from a stock standpoint. But when you hear kind of that term, exit strategy, what do you think of?
Oh, I think ABC. And then it depends on what I'm exiting from. But exit strategy is generally having several options. And what you're going to do is when you don't go into any kind of hole with one way out.
That is really interesting. So immediately what comes to mind, you're going, I'm going to have three, like, is that kind of a minimum, or are you always going, no, this is specifically long, short term, and middle? I mean, ABC, tell me more about that ABC thinking.
Okay. So I don't really know what I'm going to do, because that's where, circumstances around you will change what you're going to do. And so I might know that if something's going to go up or down, where's my break point? When do I exit? How do I exit? If for some reason I wanted to exit and I can't exit, how do I maintain that without losing? And so those are, sometimes it might be you hold or you thought you were going to hold. And so these exit strategies got to be careful, because you're just like, I'm 15 years out and that's what I'm going to go with, 15 years out. And all of a sudden you're up, 300,000%. And I tell people, well, you're up 1,000%, whether it's real estate or, I'm like, people have spent lifetimes invested in things and never made 1,000%. So then it's like, how much do you exit strategy? What are you leaving? And that's why, you mentioned in the opening, my team is so important. I mean, for me to start and do much of anything I've done, part of my strategy around me is being able to lean into them and help with situations where I want to get out of something or into something. But I do know, I guess what I'm just getting at is that, even if I want to leave this company one day, the exit strategy is putting somebody in place.
Right.
So,
Even from, building a business standpoint.
Yeah, building
right.
a business. So, exit, but can you really get the 3 or 2 people that you need to run the company? And so then that doesn't work. What do you do? How do you maintain? And so, I'd like to say it's always the key is, I know what you mean by exit strategy, but it's not always exiting. Yeah. It's sometimes sustaining, or what we call perseverance, because, you're like, man, I had a goal and just, a comet just hit the earth and
COVID just happened. Yeah. I mean, there are things, there are factors there, right?
And then in the middle of your plan, sometimes you're adjusting. Right. I was talking to you guys earlier. I said for years, I only did long run. it was always a long run. Occasionally I'd buy something, know it was down and it was a value stock, and I've done that in real estate. But usually it's always long term. But this year I was up on some companies by so much, I had to change my whole strategy to learn to take taxes. Yeah. Part of my whole life is like, well, I don't avoid taxes, but I certainly don't. Even if I wait another month and go to long term, I'd always do that. And it's just because I'm more of a long term. Watch your taxes, watch what you're getting paid. Well, this year I'm up so much on some companies. It's like if I was stuck with my exit plan, that wasn't in the exit plan. Right. Because there's no way that I thought I was going to be up 700% in 5 months or something along those lines. Now, and you want to get out, because if you don't get out, well, then you're stuck, and maybe you rode it up and down, whatever that is, real estate, stock. It can be something like CDs. It can be gold. Gold, you could have held it for the last 20 years, and we're at a high now. But
let's stay on stock too, because I think just for the sake of the way the show is set up, let's go with stock first, like that investing piece, and then we'll go to real estate next as well, because I think there are some factors that I've heard you talk about on the real estate side too that I really want to get to. But from a stock standpoint, what I just heard you say, obviously the flexibility of like what is happening in the marketplace, but I've also heard you say time and time again, it's 3 to 5 years. Like your mindset has always been long term. It's not day trading. It's not.
Well, when I was 20, my term really was 20 years. But see, now I'm 20 years older, so you hear me talk 3 to 5 years. So where strategies change, and everybody's different, right? I mean, really, some people got no money at 40, and so their strategy is going to change. Or somebody's going to be younger, and they might want to be more aggressive and, pick up something and think they can make a lot of money. But I'll tell them over 20 years, they're going to make money. And I can say, you could do one of those short runs. Sure, go play in that field for a while. Take a little bit of that, one of those stocks off the main field and take it back there and see if you can have some fun and learn. That's what it all is. I mean, even this, as we go into this last weird year of this COVID and how it just disrupted markets, nobody knew how it was going to respond. So I spent so much time learning things that really weren't taught. But was I really learning, or was I just experimenting? But I was willing to experiment, and since I'm willing to experiment, and then I don't fall in love. Remember, I told you I have a principle. My major exit plan is to go to heaven. So this is just a big game down here.
Right.
And I mean, I do take it very serious.
Yes.
But in that, I know I'm still in the game, so I just kind of adjust the things. But I got one exit plan, and that's hopefully be with the good Lord.
Now, let me ask you. Yes, that is the plan. that is the end goal here. This is not that. But okay.
And what I'm getting at is that allows me to stay focused. Right? If I love that money too much, and I know I'm going back to an episode, but it's very important. And when you're doing a strategy, you have to have your center main core. Right? I mean, that could be family. That could be that you want to ski so much. But I like what I center on because I think that brings life too, very much so. And so to me, it's like if you don't have that, the money will suck you in. I mean, you could have got into some things this last year that we all saw them on everything. You could have jumped in it. You could have just ran it up all emotionally. And so if you love that money too much, then it starts to make you make your decisions. So even at that, I didn't make all right decisions. I had 3 different sale points in there. And then I look back and go, how did I do compared to the professionals? And I was, you find yourself happy if you think for yourself and are willing to learn and not be stuck in the 3 strategies that you mentioned. Do you have 3? Do you have 2?
Right.
Well, no, I just try to understand the field.
So there's a couple of things that I want to get to that you've alluded to there. One is, just not chasing something, right? Not from a stock standpoint, because you've told me many times, you're like, look, if you're getting in the middle, you're getting in too late. Yeah. So part of your strategy that I've heard you talk about is you're looking for, obviously growth, but stocks that you're like, okay, and I know you have a kind of an evaluation process that you do, but it's not just a matter of 1 year or even 2. It's like, hey, I know I believe in this company.
Yes.
And so I'm not going to, if something else off my radar pops up, I'm not going to go chase that.
Yep.
And talk about that a little bit, just the discipline and the way that you think about investing.
Yeah. Well, I would, there's certain companies I have within my core that I know, a lot of information about the company. I understand. I believe in the product. I know my family likes the product. My whatever people get excited about. I know the revenues are good. I know basically what their debt is. And so I look at these things. And I always say you can go look at these reports, but they start to confuse me. So I look at these general things. I also look at where it's at. But if it's a company that's a strong company, let's just bring out Microsoft, and everybody's going to have an opinion on it, or even Apple. But those are 2 solid companies here this year, and I think the next 5 years out are going to bring great returns. And so you could just, there's no chasing that one. Just buy it today. Right. And so it's like, people are like, well, I want to wait. And it's like, well, that one you just buy. But there's other ones that are growth stocks, and they're smaller stocks. And it doesn't mean because the price is different or whatever. It's just, you got to this is where you got to watch some other podcasts, and you got to learn, and then maybe not mine necessarily, but how are you going to value a company? Well, it's usually in millions or billions, Right. And now we're hitting $1 trillion companies. And it's like, that's just phenomenal. But then people don't realize it can go from 1 trillion to 2 trillion, just as easy as you went from 1 billion to 2 billion. It's the same thing. It's just more zeros. And that's that we talk about the amazing thing of the power of compound.
Yeah, absolutely. Absolutely. Kylie, you have something you're waving at me.
Yes. I just wanted to point out to all of our listeners that if you have a question, if you want, if there's a topic that you really want to know more about, or if you just want to talk to somebody, their website is strategyinvestment.net, and you can go on there and type in your questions.
Great. Thank you. Yeah, a little PSA, a little public service announcement right there in the middle of the show. I love it. So one of the things that I also want to talk about on the side of exit strategy and stock is, and I've heard you talk about this lately too, is going like, hey, and you mentioned it earlier, what stage of life that you're in. Okay. So and for you specifically, I've seen you over this kind of past year go, all right, And you mentioned it to me before the show. You're like, no, I was actually kind of taking some, off the top. Yes, I'm going to get taxed on it, but I'm getting to that stage of life. Talk about that a little bit, because that is part of what I've heard you talk about from an exit strategy standpoint.
Yeah, and that's why it's hard to tell people, because you got different accounts. You have a Roth account, that's a retirement account. Then you have a joint account that might be, for more of your 50s or your 40s, or even if you do really good in your 20s or 30s. But that allows you to play some of those, work in some of those areas.
What made you this year say, I'm going to take some of the returns, and even though I'm going to get taxed on them, I'm going to take those returns?
It's because they were up so much in such a little time. So, for example, like if I'm up, let's just say 1,000%. I'm just going to use that number, okay?
Right.
On Microsoft over 20 years, okay? And it might be a little more, but it's, I feel fine with that. I'm not going to touch it. It's done and performed exactly how I thought that ship would 20 years ago. And so there's no reason to get excited over 10 years that you're up 5%, which there's some people really happy with 500%. And then, so they get that 500%.
Right.
Then there's other people that would turn around and
aiming more for the 1,000%, and that's what you're saying. You hit some of those goals. Is that more what was driving you this year?
Was I went out and bought some things because I sold real estate. One of my exit strategies in real estate was one reason. I know a lot more about real estate than I do stock. I mean, I've been buying stock for a lot of years, but I don't have my security license. I'm just a guy who.
This is our opinion.
We
always say that. This is our opinion.
Yeah, and I just read these things, and I've done well, and I've been doing that for a lot of years. But really, it's real estate. But as I'm exiting real estate, I got to put the money. So I put the money in places, and I was like, "What the heck?" I said, on many companies, I made as much money because I was buying these growth ones, and as much, and it was a weird year. It was just really weird. It got busted out and then came back, and so I've learned, because I've watched companies that I bought 15 years ago. Even 5 years ago, I can't tell you how many times I watched something go from, let's just say, $10 to 50. Back to 18. And I'm like, oh man.
Right.
But you see, that's over a long period of time usually. But I saw this stuff. I mean, it was still really fresh in my brain. And so I just was like, well, man, if I pull out 20%, I can't go wrong. If I'm up 1,000%, I'm going to have some bank. I can buy another stock or two. I'm going to own more stock than I originally had. And I'm going to have all my money back that I probably invested in that company. And then people are like, well, I want to keep going. Don't sell. I'm thinking, well, what if you could take off all your investment? And see, that's similar to how you do in real estate. You get in with low money down. If I can get into a company, pull all my money back out, have my original investment in there plus some, and then be able to let that grow, or crop it if I want, but let that grow over the rest of my life. I got zero money into that. If I could do that every week, I would take that deal every time, because then I could just continue to plant. And then then what happens is you get too many. And so then it's like, oh my gosh, I can't. And so like when you say all these companies, like, no, I don't know all the companies anymore, because this year's been so nuts. There's stuff I picked up that I'm like Bed Bath and Beyond,
Yeah.
And I don't like to mention that one, but it's like, I'm like, what the heck? I haven't seen this before. I mean, I own some of these companies already that were in this crazy thing, but I'm just like, well, look at these things. And then I look at a lot of the human behaviors, and people say, don't do that. I say, well, what do we deal with every day?
Every
day.
That's what drives so much behavior.
Like there was this one, we'll just call it a chat room out there. I don't want to send anybody anywhere, but we'll say, these guys start saying stuff, and then people just start following. And I'm thinking, wait, they only got 1 million followers. And I'm following because I'm always early on my news. I knew when it was about 1 million or 1.5 million. And I thought, oh my God, within 3 days, they're like, we got 3 million followers. And I'm like, time to sell. We might be going to 10,
that price
I'm liking this.
Yeah.
And I knew that the people would be coming, and I'm not trying to take advantage of the blood in the water. The blood's going to be in the water.
Right.
And every one of my friends, I'm telling them, hey, sell now. But they got to make that decision, because, once you make that decision to sell at 400, 450, 500, 900,
whatever that percent
that is, you have to live with it.
Right. And that's where the discipline comes in too, because one of the things that the principles that I've heard you share with people, including myself, is what is enough. Right?
Oh, yeah.
Like, talk about that a little bit, because even I know that applies to this business. We're sitting in your real estate office that you've built from the ground.
Yeah.
and I've heard you give this advice to other people, going like, well, what was enough? Like, when is enough? 1,000%? Is that enough? So talk about kind of the way that maybe you think about what that was, and setting those goals, because once you achieve those goals, then it's time to think about exit strategy. No?
Yeah, well, see, and that comes down to the character or whoever the person is and what their goals are, what they think it's going to take to make it, and basically.
Did you set specific goals like for this business? Do you set specific goals for, and we're talking about stock and investing in the first half of this show. Do you set specific goals for, okay, if this gets to 800% gain, I'm going to sell some of it? No, or do you just kind of go, nope, that's enough?
Yeah, no, I look at the whole portfolio.
Okay.
So generally I'll look at things. I'll look at certain amounts. I'll look how much things are up. So I like to, one of the reasons I like to do individual stocks is when I got an index, I don't want too much to look at. I either buy or sell. But when I can go through my stocks and I can look and I can go, okay, today I'm going to look at what's down. Anything that's down 50% or more, which is going to be very little, but it's like,
right.
Let's look at cropping that. Okay, now let's see anything that's above today. Lord, good Lord, tell me above 1,000%. Might be 500%. Sometimes I'm looking going anything above a certain dollar amount. Maybe that's 500, maybe it's 5,000, maybe it's 50,000. But I'm looking for that amount going, okay, where is something oblong? And so then I start going through and going, okay, let's look at everything that's above that certain amount. Oh, do I really want that much? Because I'll tell you, there was a time in the last week, and I didn't own very much of it at all, and I bought it before the whole frenzy. But, that one little game store. Yeah. I mean, I had it, and it was like one of my biggest stocks. And I'm like, that's not my plan. I didn't plan to have that much of that
but
stock.
What you said, what I'm
and
hearing
so
you say
I'm realizing that something's getting out of balance.
Right. You looked at your overall portfolio, you saw something was out of balance, and then you said, okay, I need to make a correction.
I don't have a problem with a Microsoft, a Boeing, Starbucks, these things being the biggest ones in my portfolio. But when you get a GameStop or you get, I'm not trying to pick on that one at all. I thought it was a good company back in December or November of last year. And I thought there was a good theater out there last November. But it wasn't because I saw this thing on at Redfin. It was that I saw value. And I told people, I said, this year I'm looking for villages that are burnt down. And right now, I mean, essentially, we're going to we'll be doing this later, but right now is a time maybe to look at, ETFs and short set. I mean, these guys have been obliterated and money's going to come back there. But now I'm not telling you to go do that because that's a totally different world and you better start learning like I did because I didn't get into that kind of stuff and I still don't want to short or do options.
Right. And that's a world that I personally have not gotten into.
Why I say I'll pay you 0.5%. You go figure that out. You got a good track record even though you've been obliterated this last year. So you could have went to Boeing when it was at $90 from $450 and said, man, you've been obliterated. I mean, I can go to Equifax. That got jacked, right? And I knew they were going to come back, but people are going to all of a sudden stop getting a third credit. No, I knew when it went to 50, it was going back to 150. So I go around and then you'll find certain industries. Like recently we had
the airlines
back in November, just a few months ago. I mean, essentially, the
airlines,
all the home builders are down.
Right.
And the funny thing is you look at all those home builders. These are your Toll House. I mean, these are the Dell. You go look it up.
Right.
But basically, they're all the same. And I saw this. Not obliterated, but I saw this whole industry and I'm like, man, numbers are good. Look at this. They're down. Everybody's down like 25%. Something happened. So I started looking and I'm like, I don't have a lot of home builders. I said, let me go ahead and pick up these 10 different builders. I'm going to grab them and whatever that percentage is, you pick that up. And all those are up almost exactly 25, 30%.
Right.
And see, I mean, if I was really smart, I'd probably take that off because that's like a good return.
Right, that return off the top.
That's a phenomenal return in 3 years. I mean, people, that's like 3 years of just a basic investing timeline. You could do that in 3 months. But I'm also like, well, I don't want to try to manage that hard because then it starts to take your time and all your mind. It already takes a lot of my time to watch. I mean, my wife often is like, what are you doing? And but I have to kind of go through them, and I'm looking at highs, lows. I'll look at what the top was for the day. So anything that goes up in my portfolio 25% that day, it comes up on my board. And I'm like, okay, now when that thing went up 25%, where does that take me to? Do I need to exit or do I want to hold? Right. And honestly, like Microsofts and Boeings, these things I've just held. I don't sell those. I mean, some I've gotten so large, I'm like, well, I need a little more money to play with in my Roth over here. So I'll take a little bit of that off. So I have $5,000 to play with to buy different stocks and stick them in the ground. And I don't like to do that because then you'll go up and then I'll do things to learn. And once again, always teach yourself, always be learning. Because I'll plug these things in here. I'll put how many shares I sold. I make sure I put let's just say Apple, for example, what I did a while back. And I put that share that I sold today. When I bought the 6 companies with that money, I made sure that Apple is now I can know whether those 6 companies are going to outperform the Apple. that I sold.
Right.
Knowing if I'm making good decisions. I'm constantly sending little portfolios, and what I sell, I try to make sure that one, the 6 I bought, was that a dumb
It'll
move?
plant another
Should I
seed
do that
over
again?
here.
Should I do that again? Or
Yeah,
was
yeah.
that really stupid of me? And actually, when I sold this and bought the 6 other companies, I won't get into those, they outperformed Apple, which did like 20%. I mean, I think it was up 15% in like
Right.
a month or two. And I was like, but my whole portfolio was up 23. So I said, so far, not a bad decision.
Yeah,
I mean, you know, so I
gotcha.
said,
Yeah.
so far.
So far. We'll see.
Right. And
The
so
long term,
when do
we'll
you
see.
exit? I don't know. That's why my great exit plan is when the good Lord comes. And when that comes, until then, I'm kind of stuck in this world, but I'm trying not to
Just
be
managing it.
Yeah.
Managing it. Well, let's pivot now to real estate. So we talked a little bit about stock investing and that type of thing, your mindset there. Let's pivot to real estate. Now we did a whole nother episode about investing in real estate and the things that you consider on that side of things. But when you buy a property, Brett, in general, let's actually, I don't want to go too wide because it's too hard to answer. Let's say you bought a duplex, because I know that was one of the things that when you started out, you were like, duplexes, that's my thing. In your mind, was there a timeline there? Was it, I'm going to hold this for 5 years? Or was it, I'm going to look at these factors and that'll help me determine what the timeline is? Like, how did you determine where the end would be when you bought that duplex?
Well, I mean, I think now if I was like closer to my age, or if I was in my mid-50s, that I would probably plan that more. I'd be like, okay, I'm going to own this for 10 years, and you know, I'm wise enough to think this stuff out and think I actually know what's going to happen right over the next 10 years. So let me figure this out, and this is my plan. But you know, to a younger kid, I was like, just go.
Yeah.
Just go. I mean, still make sure that your cash flow, make sure you're not in the
Right,
red,
the
make sure you're
numbers-
not buying a big piece of, you know, rot. I mean, if there's money still to be made after you fix the rot, then sure. But make sure and just go. And so, like, I didn't one day go, when I got into real estate, go, and I did have 100 units. I said, one day I'm going to have 100 units.
Right.
That's my goal. Yeah,
This is my goal. I'm putting my flag in the ground.
So it was kind of like, I want real estate, and I want to have real estate. So I bought a duplex, and I bought a 5-plex, I bought a house, and then all of a sudden this triplex was, you know, that I bought for, you know, let's just say $200,000 was worth $400,000, and it was like 18 months. I didn't do that. The market did that.
Right.
So now my strategy was like, man, if I took all that money I invested and I take all that money back out, I got like, I got $200,000 I didn't have 2 years ago. And I got thinking, I was like, man, I used to work for like $80,000 a year. And I remember I worked 20 some years ago.
Right.
And I was like, wow, that's like more money than I've had to work all year.
Working
And
at Boeing.
I
You were
better
working at
sell
Boeing.
this thing, yeah. So
Yeah.
often I would, you know, even today, I will look at, often when I'm looking at something, I'll look at returns. So people are like, well, why are you selling your house? It's the best thing to ever do is hold your house. And I'm like, well, you know, I know a lot of my stuff is mostly paid off, but I just sometimes will look at something else and say, well, let's see, 30%. I'll be like, okay, if I'm going to make $3,000 a year after all my expenses on this thing, and the thing's going to cost me $300,000. If I'm going to make $300,000, I'm like, okay, like $3,000. That's pretty small. Let's just say $25,000. I'm like, it's going to take me 10 years, 250 to make that 200. Do I want the money now? Or do I want to wait till they continue to expand it and to print more? And so there's times that I will say, look, I got to take this money. And it was really with real estate was like, oh, my duplexes were this. So like, you know, now I have like things that I've owned, like this building I've owned longer, but it has a different purpose, right? This building here is running my office. It has things happening. But most of the real estate I own is like, what kind of returns can I get? Will it make me money? For a while, it was like, make it a cash cow. I'm trying to make the thing make money. Then after, you know, in the very beginning, it's like, well, leverage your property. So it becomes these seasons. And that's why it's really important. Like, you know, call that one of our numbers or find your friend broker that owns some real estate. And we have brokers here that own real estate, but that will walk with you and talk with you. And then you look at that plan because everybody's plan is different, right? And the real estate for sale this month is different than last. And because the guy bought a great 5-plex or triplex last year does not mean it's going to be a good triplex next month that the next person that you don't know is selling you. And I'm telling you, I go through stuff and often people come out, I found a great deal. And I say, don't buy it. It's way more. It's how I get my clients. I mean, it's like, what are you doing? And I will show them the errors. And so, and they're like, well, these other two people said it was great. I'm like, well, go for it. I mean, it's not going to be a skin on my back, but
Right. But here's my advice.
Here's my advice. I mean, look at these two things over here. I mean, you're gonna be losing money or whatever that is. And sometimes it makes sense. I mean, they do come in
exactly
with good hands.
And I love that. And it's actually one of the questions that came in this week when we were talking about this exit strategy with respect to real estate was this question: what if my property is cash flowing? Shouldn't I just hold on to it?
Well, yeah, I mean, you could, and there's lots of different. It's that goal again. So that's why I say and it's hard on a podcast to like give individual. And this is not asking individual, but really it is. It's kind of like, well, do you have any CDs? I mean, how much money do you have in the stock market? So you want to build real estate? What are you going to do with that money? Are you going to spend all that money, or are you going to buy some REITs that are going to give you a return that you believe you're going to take a quarter of that money, buy REITs, quarter, and go take the family out for the next 3 years on different traveling, and then you're going to do quarter here. So and that really what comes down to like planning. And I'd like to say, oh, it's going to be that or this, but really it's you kind of look at it and go, well, I mean, there's real estate I still own. There's some I could have owned, but I wanted the cash. And it really and that's why it's good to have and I'll send people back to their accountant often. I'll send them back to, their CPA or their financial advisor or whatever that is, even though I'm kind of talking about it, but I'm like, well, where are you at? And so when somebody's asking me real estate, often the clients come to me, they're telling me more than just their real estate. And I never pull it out of them, but it's really, for me to tell you to buy or sell a piece of real estate, I need to know a better picture of the whole picture.
It's a bigger picture.
Oh, absolutely.
And let me ask
real estate's never a bad thing to have in your portfolio.
Right.
I mean, everybody will tell you it's a great performer.
Let me ask you this, because I almost, you alluded to it just a little bit, but was there ever a time when you said, oh, I found this other piece of property, I know I've got a bunch of equity over here, and I'm going to sell that one? Like, how do you think about moving those chess pieces around? Was there a time when you found a great deal and you had to figure it out with your other properties? Or was that more like, no, when I'm ready, I'll buy the next one? Like, how did you think about that?
It was probably more when I was ready.
Yeah, okay.
I didn't go out they usually came across my desk or a phone call. I mean, this building here, I was at home. I wasn't in the office. Another broker that was not even a broker that had a property management company and said, hey, Brett, I met you. Once again, not even a broker. A relationship that I knew, and I talked to this lady and husband, and we got to be friends, and we talked about things. They talked about working for me, decided not to want to retire. They called me 2 years later, and they said, and I thought, oh, that's a bummer. I spent a lot of time with them. I was hoping they'd come on board and help me run maybe my property management division at that time, because they were already seasoned and knew all that stuff. Right. It just didn't work out. Well, 2 years later, she calls me and says, Brett, and my building's been on the market for 2 days, and she's not even the broker. She's hired a broker. And this is where I said, the good Lord takes care of you. And she says, you want to buy my office off of Bayshore? And I said, really? The waterfront there? I said, I've been looking at that thing. I said, that's crazy you call me. And I said, what are you asking for it? And she told me the price. I said, I'll give you it. So I called the broker was so ticked because he had it underpriced. And I told her, I said, it's a good price, but I don't know if it was going to get you. Well, then I don't think he was happy. And I said, I didn't call her. She called me. Right. And I said, how much? I said, let's do the deal. And so she called the broker and said, and so once again, I'm just sitting there. And so a lot of times it just comes if I don't go chasing it. A good thing was by being willing to sell one of my apartment buildings before then, I had enough money I could buy this.
Right.
So, and that's why I say don't hold on to these things all the time. You say, well, this. I'm like, well, when I was on my way to 100 units and past, I realized I had too many units. I said, this was not my dream. You reach your dream sometimes. This is a nightmare.
Right. This is not what I thought it would be.
I got not here. What I thought. So you get there, and then by that time I spent literally years getting back down. And so as I was laying these things down, they're like, well, remember some of that was leverage. And I said, well, actually, I remember I was in this in 2008, the boss, and the banks didn't want to give no. But I'm like, I've never missed a payment in my life. I have paid, and they're like, we're not gonna. They never called my loans, but my golly, they were asking me questions every 6 months, and I'm like, what's wrong with you guys? So at that point, I said, you know what? Never again will I'm going to own more than 30% on any property I own. And that's just a personal goal. I mean,
right.
But I would not give you that goal. I'm good luck at coming into real estate.
Right.
Right. But I'm in a different spot. And so as I got out, I said, well, I want to keep these eggs. And so like this, I'll probably, as long as we have some brokers working out of here and stuff, well, this is a place good for me to plant my thing. It's right here in Old Town Silverdale. Beautiful growing town, Pacific Northwest, located right next to the mall. Well, it's a great spot. I own stock. So I'm getting myself down to several nicer houses. And I said, I have another one over towards Bellevue where we have Google going in, and we got, not Google, Amazon and a few others.
Right.
And I'm excited about that, but I don't want to own a bunch. I just want to have, it's kind of like a REIT and a house. And then by me getting one out there, I can get a different region where I used to always keep all my real estate. And the only reason I got that one out there is because I know somebody that lives in the house.
Right.
I don't have a property manager. It's really a win-win kind of situation. It's not me going out and getting into this venture 70 miles away, or as a crow flies 30 miles. But, anyways, I would suggest anybody that does real estate, try to stay in your neighborhood unless you're going to make it a full-time job where you can start traveling and then go learn those areas and the statistics, because everybody who goes and says, I'm going to do something in the 3 towns over, they're so done in 3 years.
Right. It just wears you
get a good
out.
property manager, and if you've got a good one, then you probably could do it.
Right.
But if you don't get referred to that property manager, do not trust them until you
Right.
know them.
No,
or
I
get referred.
had an experience with a property manager. I'd moved out of the area, and it.
We had this one in
bit me.
Aberdeen. My guy went down there, and she'd be like, "Hey," you should be smoking in there, and I'm like, "You're gonna hire her, man?" Hell yeah, it didn't last very long, but it was cheap.
It matters. It matters.
But it's not cheap because she didn't
It
keep the place
costs you
full.
in the end.
She didn't
Right.
keep the place full,
Right.
and he ended up wanting to give the place back to because he did it on a carryback. See, this is why I get another broker's good, because sometimes you get a contract, sometimes you do a carryback in the right situations, in the right markets, and that's where the strategy comes in. And so he didn't have to put as much down, but it was easier when it didn't work out for him just to give it back rather than go foreclosure.
Right.
He walked over and said, "Here's the contract, thank you." And I would not advise people to do
Right.
that, but Aberdeen is a tough town. I mean, when I say tough town, it's tough to market in and keep your
Keep
rentals.
tenants.
Keep
and
your tenants.
Yeah. So we're coming up to the end of our time. There's one more question here that I really want to get to, because you mentioned a little bit about it as well. And the question was how much do market conditions impact my exit strategy? So there you go. I'm going to stop there. I'm actually going to,
Market conditions. Are we talking about real estate or
real estate?
anything?
We're still on the real estate side. Yeah.
Okay. So real estate, I guess it depends on how long you plan to be in.
Because right now, market conditions are great. Like
Yes.
as we sit here, you and I, 2021 we're in, market conditions are about as high as probably you've ever seen in this area, right?
Yeah.
I mean, is that an indication where you're like, oh yeah, that does make me think about, selling one or two? Or is it just a matter of, nope, it's going to continue to go up?
I mean, it's more a personal plan. I mean, the market's going to always be moving. And so, I mean, you can say, hey, right now is good. And like I said, you got 1,000%. So you're looking at that personally and you're going, geez, I put I put 30,000 down on this property. If I sell it, I got 300,000 in equity. And those are the kind of things that you go, well, maybe I should sell it more than, the market's at the top. Yeah, but where are you at in the market? And so, I mean, you can do that. And it's not a bad time, but I tell people
But that entry point matters
now,
so much too, is what you're saying.
I was talking to somebody who called and wants to list a house today, and I said it's really kind of hard because I've been saying this for like 7 years out of my life, and it's not just past 7. I said, but 7 of them, I said, this is the best market of my lifetime. Right. And I truly was saying
And that's
that.
awesome. What a great thing to be able to say, right?
Right now I can say, yes, this is one of the best times of my right. But I could have said that like last June, but not last December. December of 2019, everything was changing a little. But it wasn't a bad market. It was still a seller's market, but things were starting. And so there's a lot of time I can say, this is the best market I've ever seen. And it's like, well, how can you continue to say that? I said, well, I couldn't say that.
That's a blessing.
I couldn't say that in 2009, 10, and 11.
Right.
I'll tell you,
there are some times
I saw tears. That's what I saw
Right.
coming, not mine. But people are sitting across the table going, how can you help me get out? And you know what I told them? The majority of them, hold on.
Yeah.
Don't get out now. So you talked about the top, and I'll talk to you about the bottom. And that's not when you want to get out. And so you got to look at your plan. Are you leaving? Are you stationed somewhere? And so that's where you might look at leaving. So like I'm getting a little older. I don't want to have as many houses. I don't want to spend 7 years to get out of here. So I'd like to have several houses that if I want to go, I'm gone in 3 years.
Right.
See, you don't understand what it means to own something. It means that you're stuck there. It owns you too. If you're a responsible, people go away and they go, "Oh, I own a podcast." And it's like, you don't own a podcast. The podcast is going to make you do things, and it's going to do. And same as real estate. I mean, I look around real estate, and I'm like, I give my wife. We have an Airbnb, and I make her do. I don't make her. I suggest to her. I say, hey, you can hire somebody, but she does it. The good thing is I told her, because I'm kind of blunt like that. I said, the reason I'm letting you do that, and she goes, well, can't you come over and fix this? And I'm like, no, I did that. And I said, if I go do that now, I'm just going to want to sell it tomorrow. I said, so I figure if you do it for a couple of years, we might be on par to want to sell it about the same year.
Because it's the work.
If I take care of that thing for 10 years, she's going, this is great. And I'm like, no, this has got rotted gutters. I just put up bird blocks, and I did this, and I got a drain going out, and there's cleaning it, and then there's maintaining it, and so honestly, I'm not trying to bust it out, but I just want people to know when part of me, like I tell people, I said I spent the first 10, 15 years building wealth, maybe 2018 to 32, and I spent the last 15 trying to figure out how I downsize.
To land a plane.
Yeah. So it's funny. People just spend their whole life trying to gather stuff, and actually you'll spend a lot of time trying to get rid of it. And a lot of people don't realize that till they're 65, and they end up throwing things. One thing I'm always teaching my kids, exit plan, I'm like, hey, get rid of your toys, because they got some good toys. I mean, really, they do. And they keep them really good. They keep them unlike I did. Threw them in a toy box, and everything was broke. Their stuff was like, the Legos are still there. I'm like, sell it while you still think it has value. Otherwise, you're going to throw it in a bag, and it'll go. And I watch the stuff. I'm like, no, they didn't do what I said to do. Get rid of it while you still have value. Because you don't like to throw something away while it has value. Right. And so there's also that. If you don't want to wait till you're done in your journey to get rid of everything, because you'll just give it away. Yeah. So there's this balance of also wanting to know you care about it still, but you're like, okay, I've had enough.
No, that's really good. That's really good.
And so kids, sell your toys on eBay.
Sell your toys before. Yeah.
And fold the box up so that you can
keep the box. The box will help itself. Yeah. Well, that's our episode today. Any final thoughts? Any kind of like overall, when you're thinking about exit, any final thoughts on the overall exit strategy for people?
Well, I think it's just being don't be stuck in your goals so much, right? Don't be
flexibility.
Have your goals, have your targets. When you hit those targets, evaluate how the rest of the ship is doing at the same time. Sometimes people get narrow focused. Well, this is that and that. Well, you kind of got to look at all your different things. So, evaluate everything before you make any sudden moves. And once you make the move, live with it. I was telling earlier somebody that, no matter way I look at something the last week, I could say I either won or lost, where I sold or where I bought or where I sold. And you go, oh, I didn't do this right. I did it too young. Or did you get rid of it just right? And the future will show. But in the end, I got one exit plan.
Right, exactly. That's really good. Well, the sponsor of the show, I've got to give a shout out to Strategy Real Estate, Brad. We're sitting in one of your offices here, so it's great to be here. It's great to use this beautiful space right on the water here in Silverdale, and we will see you next episode.